When your granddad built a house, it was $4,500. Your father built one, it was $45,000. Median home is now $450,000. Ongoing degradation of the buying power of the piece of paper we call the dollar. Well, gold reflects that. It is money. It has been for 3,000 years. So is silver. It's a junior gold. It has been. People deny it, but it's a fact. It does move with gold, sometimes more, sometimes less upside. I think we're now at a point where the crisis in fiat currencies is about to hit a head and create a nuclear event. Not just, talking about the dollar versus the euro or the yen, which is the dollar index. I'm not talking about that. Yes, that's going to go down. Dollar is going to depreciate versus other pieces of paper. Who cares? The issue is the realization that government paper and debt is not what you thought it was. It is not a place to be. It is not a great safe structure to hide under during bad events in the world. The Japanese government bonds went into collapse type mode. They printed, to quote the Prime Minister of Japan, to save it. We expected in the middle of the explosion that silver would have a correction, likely one that scared people. It came much sooner than we thought. We thought it might be March, April. You get your sharp break and then you continue up. Instead, it's been deeper and more protracted. But actually, if you stand back and look at gold and silver on a simple weekly price chart, let's say, you'll see that 90% plus of the damage that was done in the break occurred within the first handful of days. January 30th collapsed, opened up February 3rd, and into the first week of February, there was a low. Gold hit 4,400, and silver hit 64, actually 63.90. Okay. Where are we right now? Trading 60 plus, okay? So 6 months later, after early February, 6 months later, early August, we're trading several dollars lower than we did in early February. And gold is trading about 8% below where it was in early February. So the break really was a phenomenon measured in hours, a few trading days. Since then, what has demolished the psychology of any investment grade longs in the monetary metals is the time spent and the rallies that go back up, but they don't seem to take hold. And yet, every time we make a new low, like in March, the war sell-off, we took out both lows. Silver took out the $64 low. I think it went down to around 61. Gold took out its $4,400 low of early February, went down to 4,100, and then rallied again. So every time we make a new low, since the February low, it's marginal, and it doesn't sustain. In other words, you run the stops, so to speak, that, it's an obvious low, let's take it out. Okay, took it out, nothing much happens, you rally. But the rallies also don't seem to go to sustain. But still, in reality, we are trading now $3 below silver is 6 months after the collapse, which ended in the first week of February. Okay. Gold, a similar situation. So really, the decline was then, and since then, it's been wear them out. So you've worn out, especially the latecomers, people who bought at the wrong time, and point of entry is always important. Like MSA put out 3 major buy signals in the last several years. One was at $25 silver in March of 25. One was at $35 silver in June of 25. And one was at $56 silver in November's close of 2025. Those were our entry points. Not $100, not $110. So people who came in late and chased the trend got killed. And of course, now the story is, it's no good, it's going down. There are all kinds of problems with that assumption. Too many people are looking back on prior highs in silver and gold on an arithmetic scale and saying, it looks like the peak that occurred back then. Oh, it looks like the peak that occurred back then. And whoa, we laid in the weeds for 2 years after that, We're not in the same situation. The global economic monetary situation is at the point of a nuclear event. The monetary metals are cheap. They're going a lot higher. Gold is nowhere near the bull markets that it produced in 1980, or the bull market it produced in 2011 in terms of the percentage gain of the bull market. We're only half as much as those bull markets were. Eightfold gain. We're only fourfold above the bear low in gold, which is 1,050 back in 2015. Pardon me if I get long-winded. There's another smack in the face point that everybody should think about. And we know that Eric Sprott has argued, and many other people have argued, that the silver has been manipulated. For whatever reason, something is going on there to try to restrain it. And if you want evidence of it without the actual courtroom evidence, there's been a few cases, I understand. Think about this. The price, we ran these charts in a report back middle of last month. We showed the price of lead, steel, zinc, aluminum, copper, and gold going back to like 1980. Each of those metals right now is trading about 4 times higher than where it was in 1980. Gold is, 4,000, 4,100. It's low back then, and its high back in 1980 was 850. You multiply it, it's more than fourfold, almost 5. Why is silver trading 10 cents above its 1980 high? All the metals made highs around then, and yet most of them are fourfold higher than that. And yet silver's $10 above its $50 high in 1980. What the heck is going on? That ought to smack people in the face, that reality. If it's been restrained, and is it a price level it shouldn't be at, meaning too low for too long? Often when markets make mistakes, they go berserk the other way to compensate for the error they made before. Too high price for too long, they collapse. Too low price for too long, they explode. They don't behave normally. And I think silver is still in that process. And frankly, I think the 300 to 500 will occur. And once we come up out of this congestion, and I think we're in the process of trying to do that right now, as it happened to be today, this interview is occurring, we're crossing some numbers on silver and gold that tell us, this rally is going to be different. It's not just going to be another fumbled rally within the range. If that's the case, and we move up out of this congestion, I think silver will go berserk, period. We ignore those events because I think they're transient. Some of them will affirm or pre-affirm certain trends that are underway. Certain of those events will confuse. Like there's a very popular, widely held assumption that is totally wrong, that gold and monetary metals benefit from global uncertainty, quote unquote. That's totally untrue. It wasn't true when the Ukraine-Russia war started in late February 2022. All the commodities basically peaked within a week or two of that high, including gold, of that event, and dropped until later that year. Totally opposite to a war occurring. Same thing occurred when the Iran situation started, which is the first trading day of March, which is the first day of trading after the war began. Gold and silver had a drop to late March, a cleansing drop that took out the February low. Totally opposite to that assumption. So most of these popular assumptions that people look at, like, well, what's the open interest, or what's the commitment of traders, or these things come and go. And a lot of them are false. The major driver right now of the monetary metals has been and continues to be the ongoing decay in money, meaning the true value of a dollar, of a euro, of a yen, of a British pound. They continue to decay massively, year by year, decade by decade. So when your granddad built a house, it was $4,500. Your father built one, it was $45,000. Median home is now $450,000. Ongoing degradation of the buying power of the piece of paper we call the dollar. Well, gold reflects that. It is money. It has been for 3,000 years. So is silver. It's a junior gold. It has been. People deny it, but it's a fact. It does move with gold, sometimes more, sometimes less upside. I think we're now at a point where the crisis in fiat currencies is about to hit a head and create a nuclear event. Not just, talking about the dollar versus the euro or the yen, which is the dollar index. I'm not talking about that. Yes, that's going to go down. Dollar is going to depreciate versus other pieces of paper. Who cares? The issue is the realization that government paper and debt is not what you thought it was. It is not a place to be. It is not a great safe structure to hide under during bad events in the world. The Japanese government bonds went into collapse type mode. They printed, to quote the Prime Minister of Japan, to save it. The U.S. government bond is now entered the same phase that the Japanese government bond did a year or so ago. So we're joining them, meaning we're not talking about the bonds of Guinea or someplace like that. We're talking about the major powers of the world. Their debt instruments are being perceived, and rightly so, as, whoa, something's wrong there. It's not what we thought. You can't have that happen. The central banks will go ape berserk to defend that, just as the BOJ has done. The Treasury's already started buying bonds. Williams, the head of the Fed, New York Fed, said in November, the Fed's going to start buying bonds to provide, quote, liquidity. Yeah, right. Okay. Well, bonds then were like 117 on the futures. Right now they're trading at 108, 109. So since November, they've gone down in price, up in yield, despite the Fed printing money to buy the bonds. It hasn't worked. And now bonds just made, bond futures I'm looking at, and I'm sure it's true with cash, a new low monthly close going back 20 years. So the attempted basing action or the ceiling on yields has been blown through. They ain't in control of JS, okay? Once they enter panic mode, what are they going to do? This, twiddle thumbs? No, it's not a mandate. What are their mandates? Unemployment, inflation as they define it. No, this is a different mandate. It's far bigger. We can't let the house burn down. So whatever it takes, we got to print it. And gold knows this. It knew it was coming. There are a few intellectuals out there who knew it. Jamie Dimon of JP Morgan knew it a couple years ago, and several months ago says that we're now entering the bond crisis. We're going to have to deal with it. Well, that dwarfs the stock market. So anyway, that's what we're dealing with in gold and silver. And that's why these news events, I think, shove them aside. That's not what's really driving this situation.